My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to save you some money. My job is to put a day like today into context because it's a bad one. So call me, 1-800-743-CNBC. Tweet me, Jim Cramer. The implosion of our markets continues. And it's so obvious that this is a man-made obliteration. It's probably not over. Today's action, Dow plunged 2,231 points. S&P plummeted 2.97%. NASDAQ only nosedived 5.82%. Remind you that we're in one of three modalities, okay? We could be in for the grips of a quick bear market, a la the COVID 220 model. We could be in for a 2000-style bear market where tech was laid to waste for a very long time, or it might be the big kahuna. That's the one of October of 1987, where the market went down hard for 3 days, Monday, Wednesday, Thursday, Friday, and then it went even harder on a day we call Black Monday, where the market fell 22%. If the president doesn't try to reach out and reward these countries and companies that play by the rules, then the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency. We will not have to wait out too long, will we? We'll know by Monday. Fortunately, we had an excellent set of employment numbers today. At least it makes it less likely a crash will necessarily lead to a recession. But if President Trump stays intransigent and does nothing to ameliorate the damage that I saw these last 2 days, I'm not going to be constructive here. I will contain my anger, but only because I lived through 87, and in the end, I came out okay. I was in cash for the crash. I know what this feels like. Oh, and if Europe moves against our fabulous tech companies next week, then I will be furious. That I promise you, because it should not happen. None of this has to happen. Which brings me to the game plan for next week. First, if the president does nothing and the Europeans create reciprocal tariffs against our tech companies, we have a very good chance. I want to be very methodical and not unemotional. We're a very chance it will crash. It could be like Black Monday of 87. I don't see why it shouldn't. But if President Trump realizes it would be best to help our companies, especially the ones that are hung on tariffs, then we could have a rebound. We will soon find out what CEOs can do to deal with tariffs, because Levi Strauss reports on Monday. And it manufactures jeans all over the map, from Japan, Mexico, Turkey, other places in Asia. Levi's offered some weaker guidance last quarter, and it got hammered. Apparel's been a mixed bag, people. The last company that spoke in the space, we just did a piece on it. PVH said very good things. Calvin Klein, Tommy Hilfiger are doing well. Maybe Levi Strauss made the quarter, too. A few weeks ago, Walgreens decided to sell out to a private equity firm, a storied name. See you later. The company that's buying them, Sycamore. I think this was a great deal for Walgreens, because otherwise I fear it would go the way of the zombie firm that is Rite Aid. But let's see if things have gotten better, or if maybe there's some real buyer's remorse. Nothing would shock me. Tuesday night, we hear from CalMaine. Now, normally I wouldn't care at all about some egg company, but eggs were the key driver of the most serious inflation experienced in ages, so maybe they can explain what the heck happened. Wednesday, Delta reports. I expect an awful number. They already told us things aren't so great. But has business stayed weak from their last report, or maybe even weaker? I worry that the travel bull market is completely done, especially if we're going to go into recession. After the close, we get results from one of the most controversial companies in America, and that's Constellation Brands, STZ. This electrical company, the maker of Modelo and Corona, simply can't be sure yet what the tariff impact is. If it's imported Mexican beer, will it be tariffed at what rate? Will it not be tariffed? It will be the old tariff that we had, which was none. Tough to tell. As someone who's trying to figure out the tariff for Fosforo, our Mexican mezcal band that can't be made here, we're trying to figure, is it 25? Is it 10? Maybe it's exempt. I have no idea how will Constellation approach things, though. I want to know. This company already has enough problems with the existential threats of anti-craving GLP-1 drugs, including cravings for beer, and the health and wellness trends that discourage alcohol. The last thing it needs is tariffs. This stock plagued my charitable trust until we finally jettisoned it at a big loss, and I think it's become totally problematic, like all the liquor companies here. I suspect Constellation's also been hurt by Trump's immigration crackdown, because so much of their customer base is Hispanic. Hard to see what the company can do about any of this. It's a once great story. There are so many things to keep in mind when the White House starts to raise tariffs. Right now, I'm most worried about inflation, which is something that'll be, let's say, something we'll be thinking about a lot when we have the CPI report. This is what really matters. See, because This is where we are not going to be able to cut rates if these numbers start being bad. Inflation became very sticky, and it was no longer going the Fed's way even before the tariffs. Now it's going to go straight up, which is why, well, what always happens with tariffs, except that they're so high that nobody buys anything. Always a possibility. Given the scale of Trump's tariffs, there's no world where they don't raise prices on the consumer, on you. It's never good when the Fed's trying to cut rates and get the economy going. I say the Fed's locked in a box here and can't do nearly as much as they might like because they don't want to spur another round of inflation on their own. Of course, that just increases the likelihood of a recession. And many of these banks are coming out and talking about that we're going to have one. They're looking at the 10-year below 4%, and they're saying, oh, it must be a recession. Did anyone in the White House think that these things could happen? Now, anyway, we just profiled a company called Carmax the other night. It reports Thursday. And when new cars get tariffed, used cars become a lot cheaper by comparison, which should spur sales for Carmax. The stock's no longer cheap, selling at 23 times this year's earnings. But I think this might be a real investment, given the fact that the president seems unwilling to back down. Then again, if we get a recession, it doesn't really matter. You don't want to own anything connected to autos in a recession. Friday, well, here we go. Earnings season, and it's real big. It officially kicks off with the big-time financials reporting. These stocks have been crushed because Wall Street now expects a nasty downturn in the economy. The declines here are staggering. Take J.P. Morgan. It's one of the best banks in the world, but people are incredibly skittish about paying up for a bank ahead of an unexpectedly horrendous capital market. So instead of paying 14 times earnings, they're now paying just 11 times earnings. And the stocks declined from 280 to 210. That's down 17 points today alone, by the way. That's an unfathomable journey down from the mid-February high, where we believed in a revival of financial activity spurred by aggressively pro-business president. Morgan Stanley got the CoreWeave deal done, and thank heavens, done at a better price than I thought could be expected, given how the press was hectoring the deal so much. Otherwise, there's not all that much to celebrate at Morgan Stanley, though. I keep hoping that something will thaw in the capital markets, but if anything, it has just gotten worse because of the tariff issues. Travel Trust owns several financials, including BlackRock and Wells Fargo, both of which are just getting clobbered beyond all recognition. I don't think that they should be, but so what? Wells is a national bank that was doing incredibly well until it ran into a macro buzzsaw that was the president. I think it's now outrageously cheap, but what the heck is CEO Charlie Scharf supposed to say on his call when he's asked about the future? He has no choice but to be cautious and circumspect, and the stock can't rally in that kind of environment. But best for last, BlackRock. I think that CEO Larry Fink, perhaps the most thoughtful exec in the group, will give us a much-needed gut check about what happened here, where we had a well-oiled economy all set for a pro-business president to take it to the moon, and instead what we've gotten is a journey to the center of the earth. It's an incredible conundrum, and I really hope Fink will take a moment to tell us what he sees. We need to know. Look, this was a terrible day on top of a terrible week. It feels like one of those pre-crash moments in October of '87, which I lived through and traded. The eve of Black Monday. That Friday was terrible. I remember going home thinking, I can't believe how much money I lost, but I sold everything, and then Monday you come in and boom. Our only real hope is that the president comes up with something that can turn this bear into a bull, and he can do it, even as he seems unwilling to scale back the tariffs. All he has to do is offer our companies a path to get out of this hell that they did not create and they do not deserve. But the bottom line, that's a very glass-half-full hope in what feels like a glass-totally empty market. Amazingly, a year after the crash of '87, you were up on most stocks. So despair not, because at least I have your back. Scott in Minnesota. Scott.
Well, thank you. Hard-working man, Jim Cramer.
Not hard enough. Not hard enough. Not this week. I should have worked harder. My wife was back from Florida. I should spend some time with her. Shouldn't have.
Well, I tell you what, you've taught all our club members and viewers to, look at all this stuff with calm discipline, or at least to attempt to stay calm.
Thank you. Thank you, Scott. Thank you. And that's what we want, because even in '87, it was fine by '88, and in 2007, it was fine by 2013. But I got you out of that one, but clean. Let's go to work.
Right. Hey, with your help, I know we can get some great stocks at a discount.
Yes, we can.
Instead of selling in panic.
Good.
I tell you what, as a member of the club since day one, I've been watching this stock for a long time. Is now a time, or when would be a good place to begin a position in Caterpillar?
Okay, this is a great question because Cat has given up almost everything. It's given up everything. And Jim Appleby is a terrific guy. Here's what you have to do. You have to wait till he reports. You can't jump the gun on this one. Even, let's say we crash on Monday. We're down 22%. The stock will probably be at 198. I bought it on the day of a crash in 87. It's funny you mention it. But we won't know exactly whether he's buying back stock or he's pulling in his horns until he reports. He's too straight a guy not to listen to. We can't pull the trigger until he says something. And thank you for your kindness, for your words of encouragement for me. I feel like I didn't work hard enough this week because I didn't say get out now, but that's not what I can do anymore. Anyway, just remember, even a year after Black Monday, we were up on most stocks, so do not panic. I have your back, Cramerica. Someone has to. Man, tonight, after another day deep in the red, I'm helping Cramerica make sense of this market. Hey, first, luxury RH plummeted on the news of the tariffs. You hear that today about the other day? I got the CEO, get a better read on the company's global business and the tariffs. Then I want to look at the possible opportunities for success amid the sell-off. And that's why I'm seeing I got one for you. I got an auto parts company that I think you can buy right into this miserable tape. Plus, could a salad chain be a sweet spot in this tape? Because remember, domestic, no tariffs, people still going to eat. I think. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.